Good evening, I'm Nima Rajan, and this is Forum Daily for Thursday, March 17th. Tonight, Canada continues to ease restrictions in the travel and tourism sector. Vaccinated travelers won't have to show a COVID-19 test to enter Canada starting on April 1st. Federal Health Minister Jean-Yves Duclos says incoming tourists will still need to be vaccinated and have their details uploaded to the ArriveCan app. Unvaccinated Canadians returning home will still need to isolate and be tested upon arrival, and again 8 days later. Today's announcement comes on the tail end of the Omicron wave in Canada, as new reported cases of COVID-19 have declined since mid-January. And in other COVID-19 related news today, Health Canada approved the Moderna vaccine for children aged 6 to 11. Turning to the looming strike that continues to concern clients of the Canadian Pacific Railway. CP plans to lock out about 3,000 workers early Sunday morning if it can't reach a contract deal with the Teamsters Canada Union or an agreement to enter binding arbitration. The railway says the union rejected its latest offer and continues to make more demands. Saskatchewan Premier Scott Moe wants Ottawa to classify rail workers as essential, saying a work stoppage would be catastrophic for his province. On the West Coast, British Columbia Premier John Horgan has written a letter to Prime Minister Justin Trudeau saying federal salmon farm transition plans threaten hundreds of jobs. Premier Horgan's letter urges Mr. Trudeau to assure the salmon farming sector that the federal government will implement a transition program that considers the interests of the industry and its workers. It says Mr. Trudeau's mandate letter for Fisheries Minister Joyce Murray calls for the development of a transition plan from open net pen salmon farming by 2025. This coincides with her ministry's upcoming decisions to renew many fish farm licenses and tenures in coastal BC waters. The pandemic bounce back in the job market seems to be hitting certain demographics unevenly. A Labour Market Information Council report reveals the job rebound may be slightly weaker for women than the unemployment report for February suggests. It found female employment is almost 1% lower than where it could have been if the global pandemic hadn't pounded the economy. Male employment levels are about 0.5% below what they may have been. Economists are concerned many low-wage female workers may have left the labor force. Switching gears here to the recent spikes in drug overdoses across Alberta, as frontline health workers say more needs to be done to support drug users. Edmonton harm reduction nurse Kinnan Ross says drug treatment is important, but so are things like more housing and mental health services. She also says stigma and a focus on abstinence are adding to the crisis. Provincial data shows drug overdose deaths in Alberta hit record highs during the COVID-19 pandemic. Fatal and non-fatal overdoses are increasing in homeless shelters, addiction treatment facilities, and on the streets. Next door in Saskatchewan, Saskatoon-based Nutrien is raising its potash production for this year by nearly 1 million tons, and it's hiring new workers at its Saskatchewan mines due to the war in Ukraine. Potash is a key ingredient in fertilizer, and both Russia and Belarus are major exporters. Nutrien says the war is causing disruptions in the supply of key agriculture, fertilizer, and energy commodities that could have implications for global food security. Moving to Ontario, where the Hospital for Sick Children in Toronto has accepted 2 pediatric cancer patients from Ukraine that have arrived for treatment. The hospital has said the kids' cancer treatment was interrupted by Russia's invasion. A spokeswoman says sick kids understands there is a lot of interest in the children and their families, but they have requested privacy. To the East Coast now, where New Brunswick's premier says the possibility of adopting permanent daylight time will be on the agenda during the upcoming meeting of Atlantic Canada's premiers. Blaine Higgs says he believes there is public support for such a move. Ontario and British Columbia have already passed legislation to do away with time changes so long as neighboring jurisdictions in the same time zone follow suit. Most of Saskatchewan and all of Yukon already observe permanent daylight time. New documents reveal Canada's first Indigenous Governor-General took action for reconciliation within just months of being appointed. The report obtained by the Canadian Press finds Mary Simon asked government officials to outline what was being done to allow First Nations to move away from the Indian Act. The briefing notes show the former Inuk leader, diplomat, and negotiator met with the Deputy Minister of Crown Indigenous Relations last August. This was to discuss what role she could play in Indigenous issues and reconciliation as a whole. After the break, we'll be taking a look at rising concerns of inflation. We'll be speaking with Brendan Caldwell, director of Caldwell Securities Limited, about central banks, inflation containment measures, and more. Stay with us. We'll be right back. Stocks are opening lower on Wall Street Thursday, but are still holding on to sizable gains for the week. Traders are turning cautious as oil prices surge again, pushing U.S. benchmark crude up 7% and back above $100 a barrel. Now that's a worrisome sign for inflation, which was already a major concern for markets even before Russia's invasion of Ukraine 3 weeks ago. The S&P 500 lost 0.2% in the early going. Treasury yields eased back a day after rising sharply as the Federal Reserve raised its benchmark interest rate for the first time since 2018. Well, this was to help tame the worst inflation since the early 1980s. Well, joining us now to give us deeper insight into this move is Brendan Caldwell, director of Caldwell Securities Limited. Brendan, welcome back to Forum Daily.
Thank you, and happy St. Patrick's Day, Nima.
Happy St. Patrick's Day, Brendan. Now, the Federal Reserve took their first step to contain inflation yesterday. So what does this mean for investors in the near term?
Well, let me just qualify what you said. The Federal Reserve took their first step to be seen to try and tame inflation. Whether what they're doing tames inflation or not remains very much to be seen. But with inflation up in the mid to high single digits, the U.S. Federal Reserve, the central bank of the U.S., wants to be seen to be doing something. And historically, if one raised rates, that tended to slow down inflation because it made it harder to borrow. And if an overheated economy was the cause for inflation, then higher interest rates could potentially, at least theoretically, be the cure. In this particular case, it's not really an overheated economy that's driving it, but more a shortage of goods and services at the prices we're used to because of a whole bunch of different global factors, which we can go into. Your question was, what does it mean for investors? Well, the market took it very well yesterday. It was up several hundred points. As you said at the introduction, it was the market opened earlier today lower, but sort of as the days rolled on, the markets got a little bit stronger. So held on and then some to all the gains from yesterday. So the market's reacting very well to this, and we can look at why.
And what about those who don't invest, Brendan? What does this mean for just regular consumers?
Well, the tricky bit for anybody that's got a mortgage mortgage, let's start with that. Not everything is keyed off the U.S. Federal Reserve rate, or the equivalent in Canada is the Bank of Canada rate, but floating rate mortgages are really keyed off the prime rate, which is then keyed off the Bank of Canada rate. And as that begins to tick up, and the Bank of Canada raised its rate in the last few weeks as well, as you begin to see those rates go higher, those with floating rate mortgages are going to end up paying more interest and a higher monthly payment, or at least less in the way of repayment of the principal over the next little bit. So where it's going to be felt, I think, most keenly for most people is in home ownership. But then I think those on the margins that pay from the price of bread and basic foodstuffs is a big deal. Seeing higher inflation, indeed higher interest rates, may also be a big deal as well.
All right, Brendan, well, taking a look at the markets in particular, are there any particular sectors that might respond worse to this rate hike?
Well, historically, those stocks that are trading at big multiples to their earnings. So if you're a high growth stock, like an Amazon, say, or any of the FANG stocks, where your future earnings are being discounted based on a projected level of growth, that discount rate is based on current interest rates. So if interest rates begin to go higher, the discount of future earnings tends to be greater. So those historically are the stocks that have got hit the hardest. And we've really seen that since the turn of the year, as the fear of interest rates going up has hit those really high earnings multiple stocks quite hard. Yesterday and the last few days, actually, they've been responding quite well. So now that interest rates are actually going up, the stocks seem to be going up as well. So it's a little bit opposite to what most people might think.
All right, Brendan, just a quick 45 seconds left here, but is there anything that we might need to concentrate on just going forward in terms of inflation?
Well, there's so many things, but I'll answer the investment question, which is if you're looking at stocks to buy, it would be more important to be buying stocks with increasing dividends, with a history of continually growing their dividends, rather than ones like a preferred share or dividends that have been static. Or you're much better off, I think, as investors looking at companies that have the capacity to continue to raise their dividends, because even as inflation interest rates are going up, earnings and dividends from those companies can and should go up even faster.
All right, Brendan, always a helpful conversation. Thank you again for your time today.
Thank you, Nima.
Happy St. Patrick's Day. All right, coming up after the break, we take a look at the financial world a little bit deeper with Catherine Murray in our market update. Stay with us. Welcome back. Up next, Forum Daily's Market Update with Catherine Murray, host of The Buck Stops Here. All yours, Catherine.
Thanks, Seema. Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. Well, we have seen some major swings in the market this week. We started the week off on a down note with markets really selling off across the board, only to see some major rebounds Tuesday and Wednesday. Now, of course, Wednesday was the big news item this week with the U.S. Federal Reserve raising rates by 25 basis points. And the market took that in stride and continued its rebound higher. Now, the rationale perhaps for the broader market uptick is that we had oversold conditions. We had seen quite a bit of selling pressure over the past week or so, and also, in fact, since the beginning of the year. Also, of course, the rate hike was expected and perhaps priced into the market. We've also seen that cash positions by big money managers were at elevated levels, greater than 5%. And also, we've heard some signs that progress had been made between Ukraine and Russia, although Russia has denied those comments. So a few positives to help with the rebound, but there's certainly still a lot of uncertainty to digest. So let's take a look at the U.S. Federal Reserve. The statement really was hawkish. This is U.S. Fed Chair Jerome Powell. He did say, however, that they will be raising rates 7 times in 2022. He does expect inflation to decline in 2022 to have a 4 handle. He also said that the U.S. economy is very strong, and in fact, strong enough to withstand raising rates. He did, however, downgrade the growth forecast from 4% to 2%. He did, however, say that household balance sheets are very strong and that the labor market is very strong. He did also give himself quite a bit of optionality, meaning they are expecting to raise rates 7 times in total this year, but it doesn't have to be at every meeting. So in other words, he's got some flexibility, some optionality, and that's what equity markets like. Interestingly, though, and when we look at the market, we did see, in fact, tech shares surging, growth outperformed. Oil retreated. That probably also helped the equity markets over the past couple of days as well. Remember, there's so much concern about rising oil prices choking off demand and therefore the growth story. Interestingly, though, the bond market has a bit of a different interpretation to what we heard from U.S. Fed Chair Jerome Powell yesterday. In other words, they are basically saying that if, in fact, Fed Chair Jerome Powell raises rates 7 times, they're expecting a much slower economy. And interestingly, on that note, we've seen a number of bond issuance when companies want to go out and issue bonds to use that cash to perhaps grow or keep in their bank account. We've seen a number of those bond issuance being canceled. Tesla, for one, canceled their $1 billion bond issuance. And now, Tesla aside, when companies decide to cancel bond issuance, it often means that they don't like the current rate environment and they think it will be temporary. You obviously want to issue when rates are lower. So that's an interesting aside. Now, away from that, and speaking of rates, we're seeing central bankers around the world really start to increase rates. BOE, the Bank of England, did raise rates today. And recall, they're doing this to try to combat the red hot inflation that we're seeing. Let's bring this home to Canada, the BOC. We've actually seen the biggest increase in inflation since 1991, coming in at 5.7%. That was ahead of expectations. Clearly, the Ukraine-Russia war and conflict is sending oil and ag products so high. Again, these central bankers around the world trying to combat the pricing that we're seeing. Adding potentially to the pressure in the market, supply chain disruptions, and perhaps more inflation to come. CP and their workers are very far apart in reaching agreement. CP issuing a 72-hour notice to Teamsters Canada, warning of a lockout of employees by Sunday if they fail to reach an agreement. So something else to watch there as well in the mix. Interesting as well, from a stock perspective, take a look at Nutrien, NTR as a ticker there, trades in Canada. They did announce that they will be increasing their production of potash, given the uncertainty of what we're seeing in Europe. Today, we are seeing a rebound in the price of WTI up by over 5%. Canadian dollar is higher versus the US dollar. Perhaps the US Fed Chair Jerome Powell wasn't as hawkish as some people were expecting, even though it was a hawkish takeaway. And circling back here a little bit, the US economic data is in fact strong. Housing data came in better than expected, Philly Fed index better, jobless claims better as well. Aside from the Fed and inflation, the biggest news in the stock market this week was really what's going on in China. We saw China stocks surge, tech stocks in China surge. These are the ADRs that are listed in the United States, because the government there vowed to try to stabilize tech shares that are listed in the United States, removing some of the crackdown, that hard crackdown that they've had on the tech companies. Nima, I'll leave it there. Back to you.
What a busy week, Catherine. Thanks for that. For more analysis and news on the markets, be sure to tune into Catherine Murray on The Buck Stops Here. All right, stay with us. Up next, news from around the world, of course, only on Forum Daily. We'll be right back shortly. More civilian casualties have been reported as the Russian invasion of Ukraine continues for its 22nd day. The mayor of a town near Kharkiv, Ukraine, says 21 people died in a Russian artillery attack that destroyed a school and a community center. In a town northeast of Kyiv, Ukraine's emergency service says a hostel was shelled, killing a mother, father, and 3 of their children, including 3-year-old twins. Russia has said it is not targeting civilians, but last evening, an airstrike heavily damaged a theater in Mariupol. This was where hundreds of people had taken shelter. Rescue efforts are ongoing, but it is unknown if there were deaths or injuries. Well, this comes as world leaders wrap up a meeting to discuss a resolution for this war. The UN Security Council met today at the request of Britain and 5 other Western nations. They wanted an open session on Ukraine ahead of an expected vote tomorrow on a Russian humanitarian resolution. The 6 countries have sharply criticized that resolution because it fails to mention Moscow's war against Ukraine. They say Russia is committing war crimes and targeting civilians in an illegal war, which is a threat to all of them. All right, well, meanwhile, the Organization for Economic Cooperation and Development is warning that Russia's war in Ukraine will disrupt commerce and clog up supply chains. In a grim assessment out today, the 38-country OECD says the war will slash economic growth and push prices sharply higher around the globe. It says over the next year, the conflict would reduce the broadest measure of economic output by 1.08% worldwide. But it said that government spending and tax cuts could limit the damage. Well, banks around the world are hoping to limit the damage from inflation. The Bank of England has raised its key interest rate for the 3rd time since December. This comes as it pushes ahead faster than other central banks in combating a global wave of inflation fueled by soaring energy prices. The bank boosted its key rate to 0.75% on Thursday. The move comes a day after the U.S. Federal Reserve raised its benchmark short-term rate to tame the worst inflation since the early 1980s. However, Turkey's central bank has kept interest rates unchanged for a 3rd month as consumer prices surge. The decision on Thursday comes after a series of rate cuts last year triggered a currency crisis that has made it difficult for people to buy basic goods. The latest official stats showed inflation above 54.4%. Moving to Sudan now, where riot police have fired tear gas at thousands who took to the streets in the capital of Khartoum to protest deteriorating economic conditions following last year's military coup. The cash-stripped country has been facing a dire economic situation since the October military takeover. Videos posted on social media on Thursday show protesters marching under clouds of tear gas toward the Republican Palace, the seat of the military government. To the east, the Chinese government says companies in Shenzhen, a major business center, will be allowed to reopen while efforts to contain outbreaks there progress. That follows a shutdown of the city of 17.5 million people that rattled financial markets. China's case numbers in the latest of outbreaks are relatively low, but authorities are enforcing a zero-tolerance strategy that has shut down major cities to isolate every infected person. That has prompted concern about disruption to business and trade. Well, China's growing influence in the East has encouraged India and Japan to strengthen relations. An Indian official says Japan's Prime Minister Fumio Kishida will meet with his Indian counterpart Narendra Modi to strengthen their partnership. Russia's invasion of Ukraine and ties with China are expected to figure prominently in their discussions on Saturday. India and Japan, along with the U.S. and Australia, are members of the Quad Alliance that is grappling with China's military maneuvering in the region. Turning to a recent move by the European Space Agency, which is suspending a mission to send its first rover to Mars this year indefinitely. This is because of the Russian invasion of Ukraine. It had been partnering on the ExoMars rover mission with Roscosmos, Russia's space agency. Mars is more easily reachable from Earth only every 2 years, so there won't be another launch window until 2024. A Nova Scotia youth will be traveling to Toronto with his sister next week through the Make-A-Wish Canada Foundation. Connor Voss was diagnosed with a rare genetic disorder in 2020, and he'll be the first Wish grantee provided with domestic travel since the pandemic began. Make-A-Wish Canada put a hold on all travel-related wishes over the past few years because of COVID-19 concerns. All right, I'm Nima Rajan, and that'll do it for your look at national and international news for today. Remember, for more news on demand, you could always visit our website or follow us on Facebook, Instagram, and Twitter. Take care, Canada. We'll see you next time on Forum Daily News.